Ladies and gentlemen, good day and welcome to the SD Retail Limited Q4 and FY25 earnings conference call hosted by Kiran Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Chandni from Kiran Advisors Private Limited. Thank you, and over to you, ma'am.
Thank you. On the behalf of Kiran Advisors, I welcome you all to the conference call of SD Retail Limited. From management team, we have Mr. Hitesh Ruparelia, Chairman and Managing Director, Mr. Utpal, Whole-Time Director, Mr. Ritesh, Chief Financial Officer. I now hand over the call to Mr. Hitesh Ruparelia. Over to you.
I'm sorry to interrupt, sir. Your voice is not audible. No, sir. The voice is not audible properly.
Can you hear me?
Yeah, now it's better.
Okay. Good evening and a warm welcome to everyone joining us on this call. I am pleased to present the financial and strategic performance update for the second half and full year ended March 31st, 2025 for SD Retail Limited. At the outset, I would like to extend our sincere gratitude of your continued support and trust. FY25 was a pivotal year for SD Retail as we deepened our presence in the Indian sleepwear market and made significant strides in building a consumer-centric, brand-led business by growth of our EBO channel. From a legacy of 3 decades in the apparel trade, we have now emerged as a multi-channel sleepwear brand offering premium products for men, women and kids aged 6 to 16 years. Our core proposition of enabling comfort and fashionability during the 70 plus hours of weekly downtime is finding growing resonance across Indian households. This is driven by our disciplined focus on product design, fit consistency and retail visibility. From our design studio in Ahmedabad to a long-standing manufacturing partnerships, our end-to-end value chain continues to deliver on quality, comfort and brand-led differentiation. Now I will take you through the operational highlights. As of 31st March 2025, we operate 51 exclusive brand outlets, up significantly from H1 FY25. Our EBO revenue has grown by 95% during the year and 75% during the second half of the year. Our EBO revenue for the year stood at 22.04 crores in FY25 as against 11.27 crores in FY24. This scale-up reflects the successful execution of our premium markets expansion strategy across both COCO and COFO formats. Our total EBO retail area now exceeds 22,900 square feet, comprising 36 stores in malls, 10 on high streets, and 5 in airports. These stores are delivering robust productivity with an annualized sales per square foot of rupees 15,998 and gross margins exceeding 60%. Our pan-India footprint also includes over 2,500 multi-brand outlets and nearly 70 points in large format stores and regional chains. We have made substantial investment for growth of our e-commerce website, and as a result, we have delivered revenue of 2.83 crores as against 1.99 crore in FY24, resulting into 40% growth. Let me now take you through the financial performance. For the financial year 24-25, revenue stood at 173.04 crore, growing 6.45% year-on-year. EBITDA stood at rupees 14.30 crore with an EBITDA margin of 8.26% compared to 13.65 crore in FY24. We recorded a profit after tax of 8.56 crore as compared to profit after tax of 7.69 crore for the last financial year. For H2 FY25, we reported a revenue from operations of 101.36 crore, representing degrowth of 4.34%, largely resulted from closure of non-performing large format store counters and degrowth in online channel, mainly on account of non-performance of winter merchandise due to late arrival of winter, which lasted for a short period. EBITDA for the period stood at 11.87 crore, translating into an EBITDA margin of 11.71%. Profit after tax stood at 9.09 crore with PAT margin of 8.96% as against PAT margin of 10.19% for FY24, largely due to investment into manpower for future growth and increase in other overhead costs. From a channel perspective, our EBO delivered the highest growth, contributing 12.74% of total revenue, up from 6.94% last year, driven by footprint expansion and healthy double-digit same-store sales growth. Now I will talk about strategic direction. Our growth roadmap remains anchored in 3W framework: wear time, wardrobe share, and wallet share. Despite occupying nearly half the week's hours, sleepwear accounts for just a single digit of wardrobe volume and then even lower for apparel spend. We see this as a structural opportunity and are focused on converting dated sleepwear habits into style-led, comfort-driven adoption across consumer segments. Our product architecture spans mood-based collections with increasing relevance across gifting, travel, and family enjoyment occasions. We are also seeing strong momentum in North and West India, which currently contribute 80% of our revenue base. Our brand's emotional and functional appeal, whether for pajama parties, lounging, or self-care rituals, continues to deepen across age and life stages. Now I will speak about looking ahead. As we look ahead for FY26, we remain confident in the structural growth of the sleepwear category. The lines between sleep, lounge, and leisure wear are increasingly blurring, and SD Retail is well positioned to lead this transformation. With a growing EBO network, increasing D2C traction, and ongoing investment in product innovation and customer experience, we are poised for long-term profitable growth. Now I open the forum for further questions and answers. Thank you all.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Manan Poladia from MKP Securities. Please go ahead.
Hello, sir. Hi, am I audible?
Yes, Mananbhai, I can hear you.
Sir, first of all, congratulations on opening 50 EBO stores, sir, and on the execution that you've just mentioned. Sir, my second question also is with regards to the EBO growth. You mentioned a number of 22 crores. I'm not sure if I got that. Was that for H2 or for the full year?
That's the full year.
That's the full year, right? And, sir, going forward, would you say we have a specific target in mind for the EBO mix as a share of our sales? And secondly, my other question is, my understanding is that the improvement in gross margin that we've seen this year comes from the higher share of EBO mix, but the other expenses are also gone up proportionately, and the EBITDA margin front, we see a year-on-year decline. I am also assuming that is some upfront investment. So if you could just give some clarity on that, that would be great.
Thank you, Mananbhai, for your questions related to EBO. So EBO, as of 31st March, we opened 51 EBOs. We continue to open 3 to 4 EBOs a month. At this speed, we'll continue to grow during the year. In terms of share of EBO, as I rightly mentioned, from 6% we have gone crossed 12% as revenue contribution as of 31st March 2025. Going forward, we would continue to increase the share with almost 6% year on year. That's the outlook that we have. In terms of increase in gross margin, there is an increase of almost 4.58 basis points, and the other expenses, whenever we open a store, there are certain operational expenses and marketing activities that we need to conduct, which is also taking some amount of money at front end, and we have also invested into manpower for future growth. So these investments are also debited to P&L, but the rewards will be coming in times to follow.
Right, sir. Thank you for answering that question. Just one follow-up on the EBO thing. I'm not sure if you're tracking this metric, but what is our average break-even on the operational expenses and the average break-even on the capital expenses on all our EBO stores right now?
So in terms of the break-even, the P&L break-even for an EBO, we almost achieved 70% of our EBO from the first month itself. In terms of the capital recovery, we on the current mix of COCO, POFO and FOFO is delivering about 1.5 years of payback.
Right, sir. Understood. That's all I wanted to ask. Thank you, sir.
Thank you, Mr. Madhu.
Thank you. The next question is from the line of Yash Podar from Ventures. Please go ahead.
Hi, can you hear me well?
Yes, Ji.
Hi. So, good to see the numbers and, glad to see this call happening. I would like to get I have two questions. One is a slightly broader, the other is specific. The broader question that I have is that from a 5-year brand horizon and a vision, how shall we look at this company evolving in terms of your vision? 5 years down the line, are we in terms of the EBO, MBO, D2C sales that are currently, the way things are going? What is your vision from a 5-year standpoint as to how this company is going to look in terms of the sales profile and in terms of the segments that we are in? How are you envisioning that?
Okay. Thank you, Mr. Yash. This is a very interesting question. See, sleepwear as a category is a new category for consumers, and this becoming a mainstream category is the responsibility of Sweet Dreams because we are leading the category at this point of time. For making this dream come true, say over next 5 years, we would ideally expect our EBO piece to contribute about 50% of our revenue coming out of EBO, and rest of the channels would contribute balance 50%.
Okay. Hello?
Yeah.
Yeah, sorry. Yeah. So, I understood the breakup part between the sales. But what would be your vision for the brand, on a 5-year horizon from all other parameters of presence, of geographical spread, of say, a number that you're trying to think of and, hit in terms of the 5-year timeline? Can you please shed any light on that?
Okay. So Sweet Dreams already is a pan-India brand. We have about 22,500 MBOs selling our products in all the zones of the country.
Okay.
Presently, our EBO is heavily skewed towards north and west. However, going forward, we have opened almost about 10 EBOs in the south. So the next territory where we are going to grow our EBOs simultaneously with north and west is going to be south. And in terms of the work that we have to do at consumer level, see, sleepwear is a very habit-forming product. So once we have a consumer having used a good sleepwear, they get into habit of using it again and again. So our effort is not only to sell sleepwear to a consumer, but get them into a habit of creating a sleep wardrobe within their wardrobe. And since as a brand we are addressing this segment of 8 p.m. to 8 a.m. in terms of various moods of consumers, we want them to stop their night suits based on the emotions and moods and create a sleep wardrobe itself. The moods in terms of that we address currently are: the biggest mood is rest, मुझे आराम करना है. The next mood is I want to have fun, I want to socialize with my family, I want to spend time with my friends, I want to be presentable in fashionable sleepwear and still be comfortable. That's the second mood. Third mood is being sensuous. So every adult wants to indulge with the partner. And the fourth being travel. Travel is inherent part of modern lifestyle. And we want to comfortably travel and still be presentable. So these are the 4 emotions and moods that the core brand is addressing. And we are reflecting these moods through our EBOs.
Right. And the specific question that I had was with regards to the current other segments that we have gotten into, which is the non-sleepwear part, which you mentioned. Some of it is travel, athleisure. Is there a reason why we decided to allocate capital to these segments as we go? Given that sleepwear itself was looking to be penetrated and to be sort of taking leadership in. And, my assumption is that when you're into some of these newer areas and segments, and the capital allocation also would then be sort of focused towards, these newer segments and at the same time we have the nightwear segment also happening simultaneously. So just trying to get a sense of how you all are thinking about that.
So our larger umbrella still continues to be sleep. And as a habit, all of us when travel, we catch up on our sleep and we want to be in comfortable clothing and we want to be presentable, right? So that's the core idea of the brand. And the clothing that we create for travel is primarily keeping in mind the comfort and of course the fashionability that I am not ashamed of wearing it outside, right? So the core philosophy of design and products continues to be comfortable and fashionable.
Got it. Thanks so much for answering the questions.
Yeah.
Thank you. A reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Ankur Gulati from Genuity Capital. Please go ahead.
Sir, we have commented that LFS की वजह से there was some revenue loss. Can you quantify that?
Okay. So, LFS in H2, we have closed around 15 counters, and the revenue loss, which has come in the entire year, is about 5 crores of sales.
Okay. And are we replacing them with new counters, or is that a permanent?
We are replacing all non-profitable or less profitable or high inventory cycle or high investment cycle businesses with a high gross margin business of EBO.
So, sir, ये 5 CR revenue loss, what was there a EBITDA loss or a gross margin loss on these counters? And that will show up in.
So there was not much EBITDA loss, but there was definitely a gross margin loss.
And any directionally, will that improve gross margins by certain basis points in financial year 26, or is it too early to factor that in?
So gross margin, if you would have seen, we have increased by 458 basis points this year. That is a substantial upswing in gross margin, and we will still continue to be northward as our EBO piece keeps on increasing.
And just let's assume we recover this 5 CR of LFS, so that takes us to roughly 19 CR. Is it fair to assume that on a steady state basis, this will grow at 5%, 10%, or should we take slightly higher growth?
Sorry, I didn't get your question, Ankurji.
Sir, LFS, our revenue for financial year 25 is roughly 14 CR.
Correct.
Right? Or 5 CR is the revenue loss because of closure. So let's say आप जो भी store add कर रहे हैं, that takes us back to 19 CR annual revenue.
Stores we are not adding in LFS.
LFS counters add कर रहे हैं.
We are not adding LFS counters unless we find a good proposition and it is comparable to the margins on LFS counters are very thick, and these are SOR businesses. So in fact, if you see historically, we were at 60 crores of business annually in terms of LFS, and we have done away with almost 75% of that business, because that is not helping the bottom line at any point of time, and the investment cycle goes up substantially.
Okay. So in this case, ये 14 CR और नीचे जाएगा because they're more profitable.
Looks like this will remain steady, or there will be some increment in terms of annual growth, whatever we achieve from those counters.
Okay, perfect. Or for MBO segment, any views? We did roughly 107 crores. तो वहाँ पे क्या view है? वहाँ पे भी धीरे-धीरे आप लोग growth को slow कर रहे हैं, or is the
So in MBO channel, we have grown from 102 crores to 107 crores.
हाँ जी.
So there is no plan of reducing, but yes, every season we correct the tail. We try and stop business with counters which are not adding too much value to our bottom line, and we generate new business which are more profitable. But generally, it looks like it will remain steady and it will grow with low single digit kind of a thing, which is reflecting currently also.
That's fine. Sir, on MBO side, how is inventory and payment cycle moving? MBO, broader distributors.
MBO is a multi-layer business, and the investment cycle is always high. The investment cycle, if you see in our case, also continues to be high. Part of it is due to structure of the business, and part of it is because 60% plus revenue of the company comes from MBO. Structural problem is that we operate two seasons, summer and winter. Out of that, Q4, which is Jan, Feb, March, 40% plus revenue is generated in that 3 months, and most of it gets transferred to collectibles at the end of the year. So our data cycle looks bloated, but on an average, if you will see our investment cycle, it is not so bad as reflects on 31st March.
Okay. Now moving to the third segment, sir, online, any strategic views, insights for this financial year?
So EBO, e-com, that is our own website, we are aggressively pushing, and we would like to grow it almost triple digit or very high double digit for our own website. In terms of marketplace, there are some problems that we have observed in last 1 year. The growth has stopped. The players, the operators are becoming more profit conscious. So the earlier mad rush of discounts and those things are getting blurred. And this channel has almost matured. So for the channel to grow from here, looks like it will be a single digit growth.
But just on online, what percentage of 22 crores came from your own website?
So from our own website, as I said, 2.83 crores,
Okay.
which translates into about 12-13% of the total online business.
And sir, are we on quick commerce app as
We
well?
have experimented quick commerce, but the initial success does not look very promising because we are a fashion brand.
Got it. And sir, on coming back to EBOs, so given these 50 stores, if I may ask, what is the annual run rate only from these 50 stores, assuming no other store is added?
Average, we do about 80-85 lakh rupees per annum per store.
Okay, so 50 alone will take us to 40 in this financial year.
Yeah, between 38 to 40 years.
Okay. And one question just on data analytics. I don't know if Parth is on call, but any further thoughts on data analytics, monetizing or using the data of all the customers that you have? I mean, any strategy for pushing your own app?
So we are in the process of finalizing the CRM, which will be implemented during the current financial year. And we are also working on the omni-channel piece, linking some of our stores to marketplace as well as our e-commerce website. So all those technological advancements are under process, experimentation stage and pilot stage.
Great. So last thing, based on whatever we discussed, EBOs will be close to 30% of revenue now in FY26.
No, I have never said that.
No, sorry, I'm calculating, sir, at my end.
It's 12% as of now, 12 point some digits is there. And probably it would grow by another 6-7% in terms of overall revenue this financial year.
And will this start showing up some sort of a further gross margin improvement or not yet?
Definitely gross margin, but what happens is, Ankurji, that these are initial years of EBO journey. So we have to continuously keep on investing on technologies, on marketing. All those things will continue in terms of investments. Because we see traction in EBO, there is a natural traction and we want to give enough wings to that.
Definitely. Okay. Thanks a lot, sir, and wish you guys best.
Thank you, Ankurji.
Thank you. The next question is from the line of Dheeraj Kaswan from RR Investments. Please go ahead.
Hello, sir. My first question would be,
Sir, can you speak a little
Dheeraj bhai, you are not audible, huh?
hello, am I audible now?
Better.
Okay, yeah. So my first question would be that, do you have the same store sales growth number with you?
Yes, I do have. Yes, I do have. It is 11% for last financial year.
10%. Okay.
11.
So, sir, 11. Okay. So as we can see that, this year only the EBO sales has grown. So is that a conscious decision to, like, not grow the other, like MBO, LFS or those formats, or, is there a jump in demand or something like that?
So the other channels are facing some kind of headwinds, especially profitable growth is very difficult as it looks now. So we are not pushing any growth at cost of profits. We'll be happy to increase business in other channels as well, as long as it is not at cost of profits.
Okay. And, sir, are we still including the extra discount factor in our other expenses?
One second. Yes, we are including. I was just checking with the CFO. Yes.
Yeah, so about that, I've been covering other companies in the apparel industry, and I've not seen this kind of reporting that there are sales and then in the other expenses you are including other extra discount, that is promotional schemes or maybe obsolete stock or all of these things. So our margin is inherently very low because of that. Because if we are giving discounts, then shouldn't we record the revenue net of discount for our sales?
One second, I'll let my CFO answer this. Hello? Hello?
Yes, sir.
Yes, sir. Can you come back with the question?
Yeah, sir. So my question was that I checked the RHP and I read it carefully. So I noticed that there was extra discount in the other expenses. And I checked with other firms too, and most of the firms don't include this charge in the other expenses. And it was written that it is used for obsolete stock or promotional scheme benefits and other
This is not
discounts.
for obsolete. This is not for
It is
obsolete
also for
stock.
against trade, but this charge is not included in any other apparel company that I have covered till now.
So
why are we doing this kind of reporting?
Yes. So there are two things here. So first is that most of this is basically incentive given to our retailers or distributors, which we are currently debiting into other expenses. So you are right, there are two theories to it, and we had reviewed it at the finalization of the results this year also. Most of the companies are currently actually adjusting it to the revenue, as you are rightly said. But we have been actually showing it in other expense for historically also. So in continuity with our results, and basically it is an incentive which is we are giving, either it is in form of cash discount or in form of incentive which we give to our multi-brand outlet retailers, which contribute to almost 60% of our business. So that is why it is shown as other expenses.
Oh, okay. So, like, is there any plan to change this reporting standard coming next year?
So as of now, we have no such plans. Probably when we are required to move to Ind AS in future, at that time we will look at it from the Ind AS perspective.
Okay. And my next question would be that I'm seeing that our cost of goods sold, we are seeing that the gross margin has lower to 48-49%, but there's also job work and labor charges which is in other expenses. So if we include that, so then our gross
Job work and labor expenses Job work and labor expenses are a part of cost of goods sold. They are not grouped under other expenses.
But it was there in the like RHP, right? So have you
No, that was manpower supply charges. That was manpower supply charges. That is contractor manpower, which are shown in manpower supply charges, not job work related expenses.
Okay. And sir, regarding the margins, like our margins in the industry are pretty low compared to other apparel brands. Like many brands are doing 15%, 20%, some are doing even 30+%. So being an apparel house, there are so many factories that are doing job work for so many brands. Why are our margins lacking?
So, sir, first of all, see, we are an MSME listed company. We are following Indian GAAP, and most of the companies you are referring to, they are following Ind AS or financial reporting for their financials. So most of them are actually showing their rental as a part of amortization or depreciation. And whichever bigger company you will see, 40 to 50% of the revenue contribution is coming from EBO. In our case, our EBO contribution is 12 to 13%, and our rental cost is coming below EBITDA. Above EBITDA. So that is why EBITDA is very high. If you come to net profit, that will be around 9 to 10% for most of the companies.
Okay. Yes, so I'll check.
One of the reasons is the change in the accounting standard. Because basically lease rentals which they are paying, they are practically taking it to amortization below EBITDA.
Okay, sure, sir.
And the contribution is very high from EBO.
Okay. And so what is the number of current stores that we have like right now at the end of May? Have you opened more stores in
Currently, we have around 57 stores.
57.
Yeah.
Okay. And sir, my one more question would be that like we have opened a lot of COCO outlets and we are also opening COFA outlets. So like if we want to make a brand, we want to have an improvement, why are we not following a set protocol and just operating in COCO stores, in COCO model?
Yeah, it's a very important question, Dheeraj bhai. See, we have raised capital, right? But we don't want to deploy capital simply for the sake of deploying capital. We are very business minded, both on profits and capital both. Now, we are having good traction because of our performance of EBO. We are having good traction from franchisee partners to open store and do investment for our stores. Second thing is there are newer geographies where there are language problems or geographical challenges. There having a local partner and a renowned partner helps in performance of the store. So keeping these two aspects in mind, we decide whether we want to do a COCO store or a COFO store and accordingly deploy capital and resources.
Okay. And thank you all for all the answers. I'll just have one last question. We have seen that in H1 we are mostly having losses like this year, the prior year. So like is that trend going to continue or when will be the time that we will be able to cover all our expenses and book profit in the first half of the year?
If you see H1 of 23-24, we were negative by 3 crores plus. In 24-25 H1, we have reduced the loss to about 50 lakhs. And going forward, yes, the effort is that we want to be net profitable from H1 itself.
Okay.
As the EBO piece will increase, that problem of H1 being negative would be eliminated.
Okay, sure, sir. Okay. Thank you so much for answering all the questions, and all the best for future. Thank you.
Thank you. Thank you for all the questions.
Thank you. Ladies and gentlemen, in order to ensure that management is able to address questions from all the participants in the conference, please limit your question to one question per participant. Do you have a follow-up question? We request you to rejoin the queue. The next question is from the line of Bharat Seth from Deva Investments. Please go ahead.
Yeah. Hi. Am I audible? Okay. Hi, Hitesh bhai. I have a couple of questions. Actually, I was not able to hear the earlier participant because of some network issues. So I would like to understand that we are saying our EBO contribution is around 12 to 13% odd in the FY25, right?
Correct.
So which is approximately around 22 crore in absolute terms. Can we say that? Around 22 crores? I'm not able to hear your voice.
Sir, your voice is breaking.
Hello? Is it better?
Yeah, it's better now.
I said it is 22.04 crores. You are right.
Correct. Now, what I'm trying to understand is that we have been average opening around 2-3 EBOs a month. So I think since our IPO proceeds has come, we may have opened approximately 18-20 EBOs.
Yeah, we opened net 17, so we closed one and we opened 18.
Okay, great. And so now we have done around 22 crores in FY22 itself in EBO, and you said some figure per EBO. Somebody asked average per.
It's about 80 lakhs.
80 lakhs per one EBO per year.
Correct.
Okay.
So this EBO is expected to deliver around 37 to 40 crores if we don't open any EBOs.
Okay, great. Okay, that's what I wanted to ask. And so without assuming any increase in the number of EBOs, but we should be at least north of 35 crores at least.
Yeah, north of 35 crores. You are right.
North of 35 crores. Yeah, great. So that was the first thing. Second thing, I think what Ritesh ji just said, coming to P&L, so these other expenses includes the discount, as you said. So can you break up these other expenses of around how much is that? One sec. FY25 is around 58 crores. So out of 58 crores, how much is the discounts given and how much is the lease rental? Lease rental is also included in other expenses, right?
Yes, you are right.
Yeah. So can you give the breakup of this 58 crores, mota moti?
Yes, I can. So out of the 50 crore, around 20 crore 50 lakh is from extra discount.
Okay.
And around 4 crore is from cash discount.
Okay.
And you wanted to understand rental, right?
Lease rental.
Yeah, that is around 5.7578 crores. 5.78 crores.
5.7 crores. Okay. So which will keep on proportionately going up as and when the number of EBOs keep on going up?
No. So basically, in the case of EBO, the billing is happening at net of discount value.
Okay.
That's what I explained, that this major amount is coming from MBO because still about 62% business is from MBO. When we are giving incentive to our retailer or distributor, that we are debiting to P&L account through other expenses.
Okay.
And we continue to go up as we grow our business, but not the discount part, especially with the EBO.
Yeah. Okay. And coming to this season.
Bharat sir, I just request you to follow back the queue.
Just one last question, ma'am, if you can allow me.
Sir, for participants for questions, I just request you to follow back.
Okay, no worries. I'll come in the queue. Okay, thank you.
Yeah, thank you so much. Ladies and gentlemen, you are requested to ask per questions. Do you have a follow-up question? We request you to rejoin the queue. The next question is from the line of Yash Podar from Ventures Private Limited. Please go ahead.
Yeah, I had missed a question earlier. So I just wanted to understand a bit about what are the kind of currently, what are the kind of channel incentives and channel benefits that we are providing to our MBOs, since they're currently contributing the good share for us today. And what other kind of trade, say specific channels that we are following and actions that we are following for this channel?
Yes, bhai, our CFO will answer this question.
Sure.
Good morning, Yash bhai.
Hi.
Hi. So basically, in channel we have, basically in retail, when we are doing our own EBO, all the revenue is directly booked in our account, and all the rental and all other expenses are part of other expenses is a part of cost of doing business, right?
Mm-hmm.
When we are doing MBO, we are basically giving that to the retailer. So our usually a margin to distributor is around 8.25%. Cash discount varies from 3 to 5% on the amount received. And retailer margin is from 28 to 35% with an incentive of 5 to 7%, 10%, depending upon the volume of the business that retailer is giving.
Mm-hmm.
Hope that answers your question.
No, actually, just to re-clarify the question, I was not referring only to the margins and the retail margins part. I was trying to figure out given that we have a working capital cycle that tends to go on the longer side, especially in some of the non-seasonal parts. So, during those instances as a company, what kind of trade benefits and channel financing we are providing to make sure that the stock is not held up for too long and that we are able to ensure that the sale happens within the stock is sold within a certain period of time. That's what I was trying to.
I will just explain, sir. So basically, we are into a fashion business, which is two seasonal, which is summer and winter. What we do is that 5 months in advance, we are actually keeping our presentation where we call most of our 500, 600 retailers and we take the orders in advance. And based on that projection, we are giving our production quantity of our MBO. So that is so most of the MBOs, the order quantity is almost known before the dispatches happen. So planning is according to through the orders which are received in advance. That is what I am trying to explain. If your question is related to that, or you are related to the inventory side at the retail point.
No, just I'll just re-clarify it again. So I understand the part about the demand estimation before you supply to the MBOs, but in the situations where the stock is at the MBO level and the inventory is stuck at a volume level for a decent amount of time, are we as a company providing any benefits or any kind of on the shop offers or on the stock items which help to expedite the amount of stock sale or not? Is that?
Yes, Mr. Yash. So we are running like all other companies, we are running 2 end of season sales. So whatever inventory is sold is sold. Whatever is left out at the end of the season is run by way of discounts and promotions and liquidated. And whatever is unsold after that comes back, a part of it as per the agreement. Suppose if we have agreed for 4% stock correction or 10% stock correction, whatever is the agreed terms with the retailer, that comes back. Rest of the stock stays back with the retailer. But we give them opportunity by way of giving promotions, discounts, like every fashion brand.
Right. And these promotions and discounts, are they the only two things that we are providing, or are there? Yeah.
Promotions, discounts, and stock correction. These are the support that we provide to the retailer.
Yeah. Got it. I'll rejoin in the interest of.
Thank you so much. The next question is from the line of Shubham Biswal from Convengious Capital. Please go ahead.
Yeah, hi sir. Am I audible?
Yes, Mr. Shivam, I can
Yeah.
hear you.
Yes, yes. Glad to see Parth on board, sir, and all the best for his future endeavors. So, sir, I had some basic data questions. Sir, our pricing across our online and offline channels, are they almost similar, or is there a slight difference between the online and offline channels, the EBOs and MBOs and the online?
So generally they are not. But what happens is all the channels, they run their discounts and promotions at different point of time. Like suppose Shopper Stop is going on discount on 1st of June, Pantone is going on discount on 14th of June, Myntra is going on discount from today. So all these channels have their specific timing. So we have to participate with their timings. And for that period of time, the prices may vary, but otherwise the product cost is same across the channels.
Right, sir. Right, sir. Because what I've understood is, sir, is we have to become an offline first brand. I've observed that usually when the online and the offline prices are way too different, the offline footfalls fall off because they just come and browse through the store, but they end up buying online. So that is my understanding right, sir? We want to be an offline first brand. I mean, and maybe using online as just a advertisement and a tool.
I wouldn't say that we want to be, and see, no brand can now categorize themselves as online or offline. That was last 10 years, right? The next 10 years is omni-channel. Every brand will have to be available at every channel, every meaningful brand, and especially the category leader will have to be available, facilitate through technology, availability at each and every customer touch point, be it online, offline, MBO, shop-in-shop, department store, whatever it is.
Right, sir. Right, sir. Omni-channel basically, sir, right? And that is what our aim is. Yes.
That's right.
So,
That's right.
Yes, sir. So one final question, and then I'll be back in with you. Sir, actually it's a two-parter question, sir. So the first thing is that do we keep a check on the marketing spends on various channels? So for example, I think we have been an MBO forward company for a long time, and we might be tracking how much we might be spending on marketing. But now since we are scaling up EBO and online, do we keep a track of marketing spends? And linked to that question is, sir, do we also keep track of the CM2 and gross margins across channels? And if yes, can you give us a breakup of how the EBO and the EBO, MBOs and the online channels, how the gross margins vary and the CM2? I understand that some of the things due to competitive reasons you might not be able to say, but whatever you...
Yeah. Shubham, you are asking all the secrets of business, but I'll divulge whatever best I can.
Yes, sir, absolutely.
Yes, we do have budgets channel-wise for marketing, and we monitor them channel-wise. We do monitor CM2, CM3 for each and every channel. And in terms of gross margins, they are best in EBO, as well as our own website. So our own website and EBOs are the highest gross margin channels, and you see that we have grown by 95% in EBO last year and 40% in our own website. These are two very high margin businesses.
Okay. Okay, so the G2C and the EBO are the highest gross margin, right? And just a number on the discount percent. So whatever inventory is discounted, so do we keep a track of how much percentage we are selling on discounted? Like not the ones where we are giving discounts due to promotional activities, but the ones which are off season or something like that. Because do we keep a percentage of inventory or sales that go up in this on discounted basis?
So any inventory that you take after aging, either it is liquidated by discount to the customer, or if it is not liquidated, it is marked down at our end, at the end of the season.
Right, sir. Any percentage of that this year, at least for F25, sir? Any?
Sorry, what is the percentage of total? Okay. So, I've just checked with our CFO, 12.5% of inventory is what goes for discount and markdowns.
12.5%, right, sir? Did I hear it right?
Yeah.
Yeah. Okay, sir. Okay, sir. I'll join back in the queue, sir. Yeah. Thank you, sir. Yeah.
Thank you. The last question is from the line of Tushar Sarda from Athena Investments. Please go ahead.
Yeah, thank you for the opportunity. I wanted to know your average sale price, not the billing value, the sale price per pajama.
Okay. So this average sale price I will have to give you channel-wise, because there are some channels where we are ourselves a retailer, and there are some channels where we sell through MBOs. So our MBOs average price would be around $1,000, $1,100, and for our own retail it will be around 1,800 rupees.
Okay, because I saw your store at Bombay Airport, Terminal 1, I think.
Yes.
And there the pricing was upwards of 3,000 rupees.
Yeah, so I'm talking about average pricing. You would have seen also products of 1,049, 1,299, 1,499 at the same airport.
Okay.
And but I can understand, because what happens is maybe you are a fashion conscious customer and your eyes would be on all expensive items. I can understand.
Not necessary. Because this company got listed and I saw the store, I was trying to understand what you said.
Yeah. So did you like the products?
Yeah, they're fantastic. Fabulous products. No doubt about that.
Thank you so much.
No doubt about that. So, and on your EBO, how much is owned by you and how much is franchised?
So we have 17 COCO stores as of 31st March 2025, 28 COFO stores and 6 FOFO stores.
So even the franchise stores you run yourself?
Yeah. All stores are run by our team.
Okay. And how much rental do you pay? Because I heard the CFO say some figure of 5.5 crore. And if your EBO sales is 22 crore, then the rental comes to what, 20% kind of thing?
Yeah, it's about, it's upwards of 20% at this point of time, because what happens is we also operate airports. Now, airports is minimum 32-33%, right? So the average outflow, we operate 5 airports. About 10 high streets and 36 malls. Okay. So the average rental outflow is around 20-22% for us. Average discounting that we do is around 12-13% annualized.
Okay. So in terms of your business, if I were to, understand your strategy,
Hello.
Just last question, madam. Okay. Which listed company are you, trying to model yourself on? I mean, I'm sure it will not be comparable, but there are different models followed by, say, for example, Go Colors or Jockey or Keval Kiran kind of. So where do you think you're closer to which kind of a model?
So we are a 448 average square feet size retail store. And the closest would be Go Colors for us in terms of size. In terms of the margins and aspirations, we would certainly we are benchmarking Go Colors, quite a lot of territories and places. We are beating them on sales per square feet. But they are definitely a much larger chain, but we are tracking them very closely in terms of performance. And we also track other women's wear brands like W, Biba, Aurelia. We measure our performance by way of sales per square feet. In different regions, we have different competitors, and we continue to measure and monitor all of them. But yes, Go Colors is a fantastic company in terms of operations, in terms of the merchandise, in terms of fresh sell-throughs. I think they have a lot of pluses. They have got great experience, and we sincerely respect them as a company.
Mr. Tushar, does that answer your question?
I think we have lost them.
As that was the last question for the day, I now hand the conference over to Ms. Chandni for the closing comments. Over to you, ma'am.
Thank you everyone for joining the conference call of SD Retail Limited. If you have any queries, you can write to us at research@kirinadvisors.com. Once again, thank you for joining the conference. Thank you, sir.
Thank you, everybody.
Thank you. On behalf of Kirin Advisors Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.